Good morning, everyone. Good morning, good evening, good afternoon, wherever you are. I'm going to give a few more minutes for people to come and join us. Give us some time for everyone to get ready. Have your coffees, your drinks, everything. How's everyone? I hope you're doing good. I hope you're doing fine. I'm going to give for, two minutes to give some time for everyone to get the notifications and the links. Let me do one in the announcement. Let me have a look. Let's do one in the announcements. Right, that's gone. Everything is done in the school. Let's have a look. All right, okay, let's close this down. Right, I'm working on the Excel sheet or Google sheet, so to say, in the document that I share with you guys. I'm trying to finish it. I'm gonna do new stuff up here. Little new gadget. It's exactly the same as the Excel that I've shared with you guys, but I wanted to make an online version. So if I do any updates on it, you can have the latest. And I'm going to keep on doing stuff on it. I've included this time as well the duration. So the Excel sheet will give you the duration of your trade that you had. Now you have an option that you choose if it's going to be a short, a spot or perpetual. You can do that. If you select spot, then the leverage is going to be disabled, right? Also, you have the trade type, long and short, as it was before. Nothing new here. I left open and free for the exchange and token, so you can do these on your own manually because everybody is using different exchanges. So it doesn't make any sense. It's not practical for me to have a list of 10 exchanges and maybe the exchange that you're using is not on the list. So you can do that manually. Token, and for the same reason, there are 2 million tokens out there. I don't know, in the future which token you're gonna trade. So I'm gonna have that open. I'm doing nice little tricks here. You have your entry, your leverage, and it's going to be highlighted, so to say, according to your leverage. So if I go 10 leverage, you see it's nice and green. But if I go 20, it becomes a little bit yellowish. It's like, hey, you're a little bit high leverage. If you do 30, still stays yellow. If you do 40, still stays yellow. If you do 50, however, it goes like red. You're like, hey, how you doing? Are you feeling all right? Why are you going 50? So it's like, giving you a little bit fun color there. It will not affect your trade, okay? You can do whatever you like. Trade cost, it means how much money you're going to put in that trade, okay? And then automatically it will give you the trade size, how much big is your trade into the market, okay? TP now, I've done a little trick here as well. TP, it has to be right in the correct value according to what you have on your entry. So if my entry is $1 and I'm going long, so my TP has to be above $1. So when I'm doing like $5, it's going to be nice and green, right? If I go over $1, exactly $1, it's going to come back black. Hey, something wrong with your TP, right? Or even if I go lower than $1, like 80 cents, whatever, it's going to be black to give you a warning sign, so to say, that your TP must be wrong because your entry is $1. Anything above $1 is going to be fine. It's going to be like green, okay? And the same thing with stop loss, right? If I go long and my stop loss is under my entry, it's beautiful. It's going to be like no problem, right? However, if my stop loss is going to be above my entry, like, you know, and I'm going long and I put a stop loss at stop loss to be above entry, it should return flags. Well, no, because you can progress. But however, if you move your stop loss lower, okay, it has nothing to do with your entry, it has to do with your liquidation price as well. So you can move the stop loss higher because you can progress. So let's say that your price is going above your entry, it's doing fine, and then you move your stop loss above your entry, it's going to be fine. It's not going to give you any warning. Okay. However, it's going to give you a warning when you are going past the liquidation price. And if you go below the liquidation price, like 0.97, it's going to give you a black warning. You cannot go lower than your liquidation price. You're going to get liquidated before your stop loss. So that will help you a little bit in case you miscalculated your stop loss. Because when you're going into TradingView, let me go to TradingView, and you design a long entry, okay, and here's your long, blah blah blah, here's your entry, and you have a big leverage. The TradingView will not alert you where is the stop loss. So you may have a stop loss like 4% all the way down there at the price of $16.46. On TradingView, all looks good, nice, right? But the Excel here will do on the liquidation. There's a formula in there. I have a formula up there that is going to give you an estimate where the liquidation price is going to be. And I calculated with 0.02% as a margin, that every exchange has a margin. Now, more or less, they are a little bit close to each other, right? Some tokens are going to be 0.01, other tokens are going to be 0.2. Other tokens, other exchanges will do 0.05. Other going to do 3 because you have a token that, you know, like Binance once said, if you have BNB, you hold BNB, and you trade with BNB, there's no fees. So this is an estimate, an average of 0.02 as an as a fees. So it's going to give you the liquidation price automatically. So as soon as you're going to put your entry and your leverage, liquidation price will automatically be updated. So if I change my leverage to 10, then you see liquidation price went to 90 cents. If I go 20, then automatically liquidation price will go to 0.95. So that updates automatically no matter what you do with TP and sell. However, if your stop loss is lower than the liquidation price, then that will, give you a warning sign. That is wrong. You cannot have a stop loss at 0.50 cents when your liquidation price is going to be on 0.95, and that is because of the leverage, right? If I move my leverage to 3, things may be different. If I go to 1, you see, if I go to 1, look at us to 2. 2, again, it's half. $1.50 is already 50% down. So you hit exactly the stop loss, right? So you understand how that works. I'm going to do the risk reward ratio. I have the formula ready. I'm going to implement that. I spoke about the duration, then the market move, that is going to give you the gain. That's nothing new there. Stop losses and stuff like that, profit, gains, everything's going to do all the calculations. Opening balance as it was, current balance as it was, everything's going to work nicely. I finally made a way how to have that little table working in Google Sheets, that was the most difficult part. Now it's fixed, it's done, it's working. I'm still doing tests with it. And also I include that nice little table there. The market sessions, it's going to tell you when the market is open and closed, right? So if you have these Google Sheet, which is online, and it is every 1 minute is currently checking the time. What's the time right now? And it compares. I have a formula in there, and then it compares. And it should work. It should be working on any time zone. I'm trying to make that as UTC as universal, right? So no matter where you are, that's supposed to be working correctly. You're going to give it a try later on, and you're going to tell me if it's working or not. But yes, Asia right now is open, right? It's checking the time now. And also Europe is open right now because we just, 17 minutes past 10. So Europe just opened, right? So I've got the open side, and US is closed. By late afternoon, that should go open as well. And around in 2 hours, I should see Asia printing close. There's more things. I have more ideas to implement into that trending view chart. Maybe I'll do a graph about your profit. How your profit is doing according to the past 7 days. Are you doing better? Are you doing worse? It's going to give you a little graph. I'm thinking about that. How I'm going to implement it. Yeah, I mean, if you have any ideas, you're more than welcome to drop them. Go to Discord and tag me and say, hey, I have an idea. Can we, add these into the trading journal? Now, the trading journal are trying to keep it nice and simple, right? Every entry, every move that you do on the market is going to be a separate entry, okay? Trying to make things nice and clean. And the reason why, because I want to make sure that every change that you do on the exchange in the market, you track for that individual change. I could do like a first entry, second entry, third entry, and then update, which is more complicated, but I'm not scared about complications because remember the exchange, if you're gonna change the your leverage or if you change the trade size, calculations change as well. It's gonna be more dynamic, which is not a big problem. I can still figure out, but I think it's more clean to keep each entry and exit individual because you can track from, let's say that you have a same token, right? Let's say BTC, okay? And then you go for another token, another entry at BTC. So let's pretend that you entered at 22,500, for instance, and then you entered at 32,785, whatever. And you did that one with a 5x, right? And the next time you entered with extra, I don't know, $200, okay? Ignore the TPs, right? And let's do exit price. Let's say that you took out the first bunch, I don't know, at 72,000. And the next one is still running, okay? So that way you can see exactly how much the first one went and it will not go away. You're going to keep that number there. It's recorded, right? And when you're going to exit the next time, maybe on 54, whatever, I'm giving you just an examples, then you have a second entry that is being recorded. And now you're going to always remember exactly how much was your first exit and how much was your second exit. So I like to keep things more, recorded and keep it nice and clean. Okay, but I'm open to any situations. So I hope that's going to be nice and working right. It's going to give you the reward ratio according to your TP and stop loss. If you do wrong stop loss and TPs on the Excel will give you a little text in here says the trade is invalid because your TP and stop loss are not correct. Anyway, before you're going to approach the risk reward ratio, now TP and stop loss, they will give you individual warning according that if your TP is wrong according to your entry and your stop loss is wrong according to your liquidation price. Okay, still under development. It's not finished yet. I'm going to keep on updating that. Let me make sure that you all have that link. I'm going to copy that link. I'm going to paste it here in the Zoom meeting. So here's a link. You're more than welcome to keep it. Here you are. I'm a bit late. Where can I download the template? That's fine. I just posted the link. Can you please share the trade? Yeah, sure. In here as well, on the same Google Sheet, which is going to be always online and always going to be free for you guys, I have the gangster fib settings as well. I give you all the settings here on the left, so you don't need to type them manually. You can copy paste each individual settings, the colors, the percentage, right? And how it's been inside the settings. So you can see, how it looks. This is the way I've done it, okay? I've got the risk calculator as well. I'm going to fix that. I'm going to progress with that one as well. Maybe, I like your little drawings there. I've got the risk calculator. Maybe I'm going to change that a little bit. Well, I'll see if I have new ideas. I've got the DCA calculator. You can, see how you can DCA any token. I can go through individual videos with that one. Win rate tables, how important for you to have the correct ratio, right? It's very important for you to have anything above 3:1. I have an example here with numbers. I have the example here with no numbers. Recovery, we know about the table recovery. If you go down by 10%, you need 11.11 for you to recover, right? If you go down by 55%, you need 122. If you go down by 95%, you need 1,900 to recover. Compound, that is another little lovely table here. How important for you to compound and how easy for you to reach your targets. And the last one is, what is your target? You need to know your numbers, get your numbers right. A lot of people don't know what are the targets, like the daily target, the weekly target. You need to know their numbers, right? Because once you reach these numbers, then you are good to go with your trading and you're going to reach your financial freedom. And this is my target. I want to make sure that you all go towards your financial freedom. And to get there, you need to know exactly your numbers. So you only need to do two things on that little table here. You need to change what is your monthly expenses, everything. How much do you need for you to survive? Put it that way. How much money do you need every month, right? And every individual, every person will have a different number. There's no fixed numbers. Everyone has a different number. I'm a father of two. I live in Cyprus. I have a different lifestyle. I have different expenses. You may have, different life, different expenses, different needs. Put everything down. Make sure you calculate everything, like your rent, your travel expenses to go to work, your petrol, your food, your clothes, everything. You need to put down all the numbers, how much money you spend every month for you to go buy. It doesn't matter what number that is, okay? Maybe it's going to be 1,500. It doesn't matter, okay? Now, automatically the formula will give you what is your target, that yellow there. So it means that if you reach $450,000, you are moving towards your financial freedom. This is where things going to change for you. And what does it mean? It means, a lot of people have the wrong intention that, I need millions for me to be independent and free. No. If you spend 1,400 per month because you're single, you're not married, and you need to be financial free, all you need is $450,000, right? Now, for some people, for some, countries, 450,000 may be easy target, right? For other people, it's not easy target. That is because in the era that we live in and the area that you live in and the kind of lifestyle you have and the work that you do, right? Not all economies are equal. So by making $450,000, I want you to think that for the next 25 years, you don't need to have any income. If you have $450,000, it means your expenses are covered with the same lifestyle, exactly what you do today. You're going to be covered for the next 25 years. These $450,000 will take care of all your expenses. And you have, the freedom to move, to do whatever you want. Okay? I know it sounds nice. It's not exactly that way. But that is your first target, not 1 million. 1 million is really, really far away. So 450 is more realistic. And then the next thing that you need to fill after you fill the amount of expenses, how many years do you think, you believe you're giving yourself to reach that target, that 450, right? So I put a general 5. Would you like to do that in 10 years? It's up to you. Would you like to do that in 3 years? You're in a hurry. It's down to you. What it does is giving you the targets. If you want to do that as a normal business, because you need to treat trading as a business, right? So you need to have a realistic business plan. That's something that you can sustain, something that is going to be, vital, right? You can keep on it, track on it as well. So 5 years is realistic. So it's telling you, you need to gather 90,000 every year for you to reach the 450 in 5 years. Okay. Now that for some people still big number. People say, hey, come on, man, I don't make 19 grand per year. I make 20 or 23 or 30, whatever that is, 10. Okay, we need to break that down. Semester is 6 months. Quarterly, every 3 months, right? Monthly, you all know what it is. Fortnight is every 15 days. Weekly or bi-weekly, you can say. Fortnight is bi-week or fortnight. This is a weekly and this is your daily target. Now, a lot of people, as I said, big numbers are scary numbers. They don't see that it is manageable. That's why I need to break them down into smaller numbers. And here's your daily, $346. So what are you going to do with that? Well, you're going to start trading until you're going to reach to the point that you are making $346 per day. It's not going to be on day one. I promise you that. I know that. I understand. It's not going to be by day one. Okay. If you go to compound, which is the next tab, I want you to say to me, let's pretend that I only have $100 to start with. Okay, I'll take the bare minimum. Let's say that I have 1,400 expenses, and I just managed to have $100 to spare, and I don't care if I lose this $100. It's very important. The money that you're going to trade, it's money that is not going to affect your day-to-day basis. That is crucial. Now, you have a table of 5%. What's that table? That 5%, it's a table to tell you that how much money you increase your wallet, your capital, by having 5% increase every day. So your daily target is like 5%. So if you start with $100, that means by the end of the day one, you're going to have 105. Okay. The same thing with a $10, 10%, the same thing with 15, 20, and so on. I like to take an average of 20% per day. It is not very difficult, but it's not very easy on the other side as well. I mean, it's not very easy, but it's not completely impossible. You can do it, right? Now, because why do I say this? Because I go to Discord and I see all these lovely tiles, and everybody's doing 100%, 300%, 400%, and I see that. I mean, let's go to bragging rights here. Where is it? Here we are, bragging rights, and 246% on 50x. Who's this? I'm gonna call names. 15x on, and you have 40%, 48%, 13%, 3%, 8%. That's good. Someone's doing, he's using only 2x. Well done on him. 69%, you get the idea. You got 359%, you have 15, 93, 52, you got 23, 458, 148, 120, you got 214, you get the idea, right? And if I go to school, I bet that we're going to see something more crazier, right? And in crypto bad as well, the hub that we had, that was even more crazy back then. I mean, look at that, right? And 905%, and that is only on 10x. Well done, congratulations. On 10x, you had 1,000% return. That was a fantastic trade. However, I want to make sure that all these lovely, nice numbers, how much impact they have on your capital. That's the most important, the capital, right? So 20%, I think is realistic in total as your capital, right? So if we do that, right, I have a little table here on the far right, the yellow one, the orange one, sorry, I'm not colorblind, is orange. Every day is going to tell you how much your profit in dollars, that is the percentage. The amount that you see here is by the end of the day how much you should have, 120, and this is going to be the start of the next day, right? So first day you start with $100, you end up with 120. So day 2 you start with 120, right? That is compounding. So first day you make $20, next day you make 24, the day after you make 28, goes, right? And the further it goes down, you can see that you are approaching, remember, your target. Here it is. What was the target? 346. Okay, let's go back. 346. I'm going to reach that target by day 17. So you start with $100. You only target 20% per day on the capital. And by 2 weeks later, by day 17, you're going to hit your daily target. Not on day 1, on day 17. Right? Progressing. Slowly, you're going to get there. Once you're going to reach there, right? Once you're going to reach there, then you can say, okay, you know what? I've reached to the point that my trading size is going to be equal to 2,200-ish, right? And if I trade with 2,200 per day, by targeting 20%, then I can make my daily target, which is 340. And if you every day you hit that daily target, then you can hit your weekly target. Now, a lot of people say, hold on, the numbers are not right here. How come a daily is 300 and weekly is only 1,700? It's supposed to be over 2,000. No, you don't trade every day. We don't trade every day. And not all days and every day are not going to be perfect, right? So I have an average here of 5 days. All right, 5 days maximum per week. Treat it as a business. Business is going to be open Monday to Friday, or I don't know, maybe it's going to be open Sunday to Thursday. It's up to you, right? It's a business, maximum 5 days. So this is a magic with the compound, and you know, if you also see that table on another aspect as well. You start with $100. If you compound with 20% per day, right? By day 20, remember, 20 days per month, 5 days per week, right? So you could go up to 3.8K by the end of the first month if you compound and you start with only $100. Now that is under the perfect, conditions. And we don't live in the perfect world, in perfect conditions. But even if you make half of it, you start with $100 and you end up with almost 2K. It's impressive. And that is by only targeting 20% per day. I know the numbers are very small, like 20%, compared to these lovely tiles that we've seen. But I'm talking about 20% on the capital. Okay? Now, if it's going to be too scary for you, be my guest and use 15 or 10, whatever is comfortable for you. 10% per day, it's still enough, right? Even 1 month later, after you invest $100 and you compound every day by 10%, by the end of the day or by the end of the month, you still hit, you're gonna hit your daily target, right? You're gonna hit the monthly target. No, not the monthly, but it's gonna take some time, but you're gonna hit the daily target. It's going to get there, okay? It's going to take some time, but you're going to get there. This is not a race of time. No, we're going to try to be building a business that is going to be consistent and vital, right? And healthy. This is what we want to do, and this is what we will do. So, know your numbers. Have the numbers right. Have your targets right, and then stick to them. Now, if you have one day that is going to give you 30%, that's fine, but don't overtrade. Close the damn thing and have a walk. Go to the seaside, go to the high street and buy something for you, okay? Reward yourself with that extra 10% that you made, okay? Because your daily target is 20%. Don't go spend all the money, right? Because you have a monthly target and you have a yearly target, right? And you have the big target, which is the $450,000. Don't go spend everything at once, you know. But if you make 30% per day, it's fine. The next day is going to be more relaxed. You still target the 20%, but if you, let's say the next day, you're not so good with trading and instead of making 20, you made 10, it's okay because the previous day is going to give you the average of 20%, right? So not everything is going to be smooth. I know that. This is life. Great, thanks, that's good. Also, when we have officially started to use this, the trading journal is under development. You can start use it. It's not going to give you any wrong numbers or anything. I'm going to add things. You can still use it, but make sure that you keep a copy, right? Because I think you cannot use exactly mine. I think you can say save as, make a copy, use that selection here, make a copy, and then you can make your own. But now and then, you can use all the other tabs. This one, the trading journal, is under development. I'm going to do a few things to make it more pretty, more nicer, give you more tools to keep things. Maybe on the right, I'm going to add remarks, a little area for you to write down, how you feel about this trade, where do you get that call, maybe. Maybe a link. You want to post a link of your trading view. How was your setup, right? You can do little things like that. I mean, what you can do, right? And let me give you an example here. So let's say that you do something like this, right? And the market is going the same way as you expected. Here's your stop loss. So that's your setup. You keep that as it is, right? And then you can go to the exchange. Let me grab that one here. So let me do these. Let's have some fun. So when your trade is kind of finished, let me grab my towel, right? Just one example now here. And then go to trading view and let me see if I can paste that in here. Yes, I can. So here's my picture. Let me increase the opacity, right? So I'm pasting that right next to my setup, right? Go to my little object tree window here, and then I'm going to select my image, my long position. I'm going to make it a folder here, right? And I'm going to say that name of today's trade. I mean, what's the date? Today is the 10th of September 2024, right? And here it is. And I'm going to lock it so it doesn't move, and now I'm going to hide it. And that folder is going to be always there for you. So when you're going to come back in the future and say, hey, I had a trade on the 10th of September and look how it was. That was my setup and that was my result. And you have a nice history, right? And at the same time, what you can do, you go copy link, right? And then go back to your journal. I'm just giving you ideas. I just came back with that idea just now. So you come back here and let's pretend I'm going to move that to the right, and then you can post here your link. And now you have a history, right? So you keep everything nice and clean. So here's your journal, and then because, when you go back in the trading view, this is going to be too messy in the future, right? So instead of deleting, put in a folder and hide the folder. And now it's nice and clean and you can carry on and do the next trade. Okay, that's giving you ideas how to keep things nice and smooth and tidy on your trading view plus on your journal. And then, if you want to see that trade or you want to refer to that trade in the future, you just click that link and it's going to take you back there. Right? Let me go to that link. Let me click that link and it's giving you a window and voila. Here it is. Everything with your trading setup, and your tile. How cool that is. right? So we can do that. You're more than welcome. Good stuff. Okay, let's go forward. Another little thing for the investors, what the investors do in real life. Another little example here. I would like for everyone to... Yeah, you can do layers. Yeah, think exactly the same way like Photoshop is doing layers. You can do it with the object tree, right? So you have layers, and you can move them up and down as well, exactly like Photoshop, right? And you can have as many as you like. There's no limit, I guess. I'm not sure about this. I don't think Trade View is limited on the object tree. No, you can have as many lines you like. If you do a TA, it doesn't make any sense for me to limit me that I have only 100 lines. I want 1,000 lines. No, I don't think there's a limit to the object tree. Okay, so another rule for the investors and the people that are wealthy that they are using. I'm not saying it's going to be exactly that, but it's a good rule. Okay, so you need to break your numbers. Is under the same subject that know your numbers, right? So you need to know how to deal with your income, your money, right? If you deal with your money, then the money, they're going to respect you. And that's the only way that you can make more money, by you respecting your money. And how do they do that? How do they do this? So let's pretend that you have income, right? And after your income, we all know what's happening with our income. Gets taxed. I know that. It's terrible. Tell me about it. But after the income, it comes to your family, right? It comes to your home. And we need to have a good, nice direction. We need to split that. I'm going to do that on the Google Sheet as well, right? But I'm going to do that here very quickly with you. So you need to split that to expenses, obviously. So we're going to have a two list of expenses, but the expenses, let's put the word need, okay? So what I'm saying here is you're going to need to put everything a little bit bigger. Thank you. So under that list, I want you to have everything that you need, right? What do you need? I need to have like expenses like rent, okay? Some people have rent, okay? What else? Oh, let me use the same list. Food, right? Petrol, electricity. You need electricity, right? You can't go without electricity. You can't go without food. Petrol, if you have a car, you have petrol. If you don't have a car, maybe you have travel expenses for you to go to work, right? You get the idea. Let me do these a bit smaller ones. 24, that's good. What else do you need, right? You need clothes. Come on, can't type today. What's wrong with me? Clothes. That's not even right. Oh my god, I forgot how to write clothes. Right. What else do you need? Whatever you need for you to survive, it has to be on that list. Okay? Now you have another list here. That is going to be want. What I want, but I don't need. Extra pair of shoes, right? Extra, I need extra shoes. I need second car. Anything that it goes under the luxurious things, right? Something that you don't really need for you to survive. I need an iPhone. I have an Android, but I like to have an iPhone. Why do you need an iPhone? While you have a phone, right? Stuff like that. I need to have 5 bags for the ladies, right? They're not, they're not happy with 1 bag, they need 5 bags. So all the extra that it has to go under that list, okay? And then the last list, which is important as well, is going to be your savings or investments, okay? So savings and investments is going to be here. Here we go. So 3 lists. You need to route your money into those 3 lists, okay? The most of people that make the mistake is between these 2 lists, right? Because generally all the people have 1 list, 1 expenses, right? And they put everything together. In reality, if you can manage to separate these kind of things, it's going to give you a better picture, okay? So the need is only the stuff that you need for you to survive. What do I need to survive? I need to have, 1 pair of trousers. Well, I mean, not 1 pair of trousers, but let's say 2 pair of shoes. I don't need the 3rd one, or I don't need the 4th one, right? I have a phone. I don't need to have an iPhone. I have a car, which is a Toyota. I don't need a Lambo. Why? Because both of the vehicles are going to take me from A to B. It's going to be a different style, yes, maybe. The Lambo definitely is going to give you more fine tickets, right? It's faster. So it's more trouble anyway. So you get the idea. The things that you need, it has to be on the left. Now, okay about separating my expenses and okay about my savings. My savings could be for a holiday, could be for trading, could be anything. What now? Well, you need to have the numbers right, okay? So, what are the numbers? The numbers are, you need to make sure that 50% of your income does not exceed, right? Does not exceed your income. All these lists should not go over half of your income. Okay? Your want, it should not exceed 30% of your income. Okay? And savings is good idea to have at least minimum 20% of your income should go straight away to savings or investment. And that's the rule, the 50 or the 5-3-2 or the 50-32. Okay, 50, 30 and 20, sorry. So that's the rule, 5-3-2. Now, if you want to be more, let's say, adventurous with your life, what you can do, you can make that 40%, if you can manage to do that. That will be the ultimate target. The want, shrink it to 20, and then you have more money for savings or investment. But at least try to manage to have that rule, 5-3-2, before you go to the 4-2-4. Right? It's like a football match. So, does that make sense? Has anyone thought about that? Or has anyone seen this before? Right? It is very, it is very crucial for us. If we want to deal with money, we need to make sure that we treat money in the correct way. We respect the money so the money can respect us. So if you control your expenses, then you can control your wealth, okay? And to be honest, we cannot control the income, okay? You go and work, let's say 40 hours for you to get X amount of dollars, right? And if you don't go, let's say, to work because you were sick for a couple of days, and then you do 30 hours, right? The people are going to pay you for the 30 hours. So you cannot control the income because you don't know what the future is going to hold for you, right? So if I cannot control the income, and also all the stupid things that life's going to throw you on your way, right? Maybe you're going to have a small accident with your car, a blown tire. You have to fix your tires now, right? That's not a monthly expense. This is like extra, right? You don't buy every month shoes, so to say. So your shoes got, ruined, and you need to buy new shoes or new clothes. Things that don't happen every month. Life is going to throw you all this lovely stuff out there. A mistake on the utility bill. Maybe your water pressure pump, it wasn't operating correctly, and it was continuously working, and your electricity bill and your water bill went up to the sky, right? Because you have a leak. Those kind of things, life is going to throw you. So you need to be prepared, right? You're more than welcome. No, no, don't be sorry. You're good. Before the US market open. Okay, cool. So this is the kind of, you need to put the numbers right, and if you do this, I promise you, you're gonna have a better control. And if you do that from now on, you're gonna see your money increase in time. Okay, you need to be strict, and you need to put the numbers down, because majority of the people, not all of them, majority of the people, because life is so busy, they haven't put things down into paper to see exactly how much to spend into what things. It's very easy for us to go to the high street and walk by to a nice shop and see something and say, hey, I'd like to buy this, I like this. You go to the supermarket and you got like 20 aisles of 1 million, items there. And you only need to go and buy milk and bread, but if you go through the aisles, you're gonna walk out with a full basket of things, right? And this is how, the society has been built to make sure that we spend money, right? Everything around us is been designed in such a way for us to spend money. You have a house, and then you go down the street, and a nice building, someone's building a nice home, and you see that, I like to have these. You see a nice car, and you want immediately to buy something better that you have, right? It's the nature of the human nature. This is how we are. We like better things. We need more, not necessarily more expensive, but you need to update your life with new things, right? And this is a little trap that we fall. We always want to spend more. We always want to have newer clothes. Then we like to follow the trend, the fashion. Oh, the new BMW 7 Series is out, and it has this and that, and I would like to get this. Or I like to get the new iPhone because it's doing such and this and that. It's doing nice pictures and blah blah blah. It's doing nice videos and raw photographs. All the gadgets out there, right? And that is to make our people, spend more and more, and that way they make sure that the money is flowing, right? They have a cash flow. You need to make sure that you control that. Okay, so you cannot control 100% your income. Try to control your expenses as much as possible for you to build a wealth, A, and B, for you to be prepared for anything that the life is going to throw you. Okay, so if you're going to be always on the line, you spend all the money that you make, then if life is going to throw you something big, then you're screwed, right? What if you need a medical assistance? And we know today that if you go to a hospital, to a doctor to seek a medical assistance, they charge an arm and a leg, right? It's terrible. Especially in the United States, you don't need to be sick in the United States. You don't want to be sick. If you're sick, you're going to lose a fortune. So be careful with your money. Try to have that rule 532 and then try to make it to 424. Okay, it's not easy. It's going to take time, but please make sure you do the right list between needs and wants. Right, that is the most important. And then later try to save some money for investment. And you see, it's like 20%. That means after that you take care of your needs, you have some money spare. If you use that little money for you to trade, and if you lose that money, which I don't wish for you to lose that money, but if you do lose that money, it's not going to affect your needs, right? We need to make sure that everything that you need is covered. We don't want you to run into troubles. Okay, so let me clean my list here. Let me clean the screen. How many prices do I have here? Here we are. Nice and clean. Gone. And the lines. Right. So it's fine. It's finance management. That's true. I mean, it is finance management. You need to manage correctly your finances in your home, and a lot of people at least myself, I can speak about myself. We never been taught about these at school. I wish they did, but we never did. So please, get this right, and then come back to this little table here to what's your target, and then that will become more easier. All right, that goes with it. School teaches how people to be broke. Yep, I agree with you. They give. I mean, let's be realistic here. School. What is school? It's a prison. It's a modern prison. My idea is that school, it doesn't need for the kids to spend such amount of time to get that knowledge. I believe they can get that knowledge far sooner. Right? Yeah, we are. So we teach the kids, that they need to go to school at, let's say, 8 o'clock, right? And they need to finish by 1. That mentality, we're building that mentality for 12 years. I'll say the minimum, which is what's the minimum years that the kids need to go to school to education, 12 years. For 12 years now, they need to go to school 8 to 1, okay? So that becomes a habit. So they need to go to work in the future, 9 to 5, okay? And a lot of things, okay? There's a lot of things. I'm not against school. What I'm saying is they don't need 12 years to spend to learn, to get the knowledge in 12 years. And the knowledge that they're going to get after 12 years, going to college or to university, is only I'll say, I'll be generous, only 30% of the knowledge that they took all these 12 years, they're going to use it in university, plus they're going to learn what they're going to learn in university. And in university, they're going to spend minimum 4 years or 3 years. So add that on the top, it's like 15 years they're going to spend in education, and then going to go to work. And nowadays, that all the kids have, well, they used to have bachelor, they used to get good jobs, but now someone has a BA, it's like nothing. Now you need to have masters. So you need to go spend more time, extra 1 year or 2 years in university to get a master's, for you to be ahead of the rest of the masters. Now the majority of the people nowadays, they all have masters, right? Because, by having a BA equals nothing, you should get a master's. And now majority of the people have masters and they still don't get good jobs, right? And a lot of people doing doctorates, PhDs and stuff like that. It's crazy. It's crazy. Will this recording be uploaded? Yes, it will be recorded. It is recorded and it will be uploaded on the YouTube channel. So, yeah. So I'm not against school. What I'm against is how the system is. And yes, each different age should learn different things, but it doesn't take so much time. They can do, what they learn in 12 years, they can do in 3 years and 4 years, I believe. And then I'm not saying that, by the age of 8, okay, so by age of 10, they go to work. No, they need to enjoy life. I'm not saying that by age of 10, they need to work. No, they need to learn how to invest. They need to know how to make money and how to use their own money to make more money instead of you exchange the hours and knowledge. So, they teach you, so you have a knowledge. So after the education, you go to work to exchange the knowledge for you to get money. That is a big scam. They give you knowledge so you go back and work and make money. Nah, come on. Anyway, I don't want to go deep into this. I want to give you a very, very positive message today, right? I give you the tools for you to get the numbers right. I give you the idea how to manage your finances. I want to give you also a nice, important message. I want everyone to worry less in your life. In everyday life, I want you to worry less, okay? Everyone is worrying because they have their own life, they have their own problems, they have their own path. And that path, which is called life, it is not always easy. And we know this as well in trading. It's exactly the same. Trading is not easy and can give you a hard time. And I know this, and I understand this. And that's why I want to give you a nice positive message. Please try to worry less. I'll ask you one thing. If you have a problem and you understand the problem, then if you know the problem and you know what to do to solve this problem, then you don't need to worry because you have a solution. It's going to take time for you to find a solution. That's a different story. I understand that. But you don't need to worry for a problem that you know the solution. If you know the solution, don't worry. You're going to do it. Okay? You're going to get there. On the other hand, if you have a problem and then you don't have a solution, there's nothing that can be done, then again, you don't need to worry because there's nothing you can do about it. Right? I know it's contradicting, and people say to me, come on, you can't worry zero worries about everything. No, but if you have a solution, then be proud that you have a solution and work on that solution. Right? Always, you're always going to have a worry, but don't let that worry to drown you. Okay? And also, if you have a problem and you're stuck and say, hey, it is what it is, there's no solution to it, I'm screwed, it's broken, right? Let's say something got broken, it's broken. Can I fix it? No, I can't fix it. Then don't worry about it because it cannot be fixed. Okay? So trying to take things more easier. I'm not saying to ignore things, but trying to take things easier in your life, right? Trying to worry less, not zero, less. And happiness is going to come it's going to come within you. Okay? It's going to come within you. Don't wait for somebody else to make you happy. You need to be happy with yourself first. Right? Your inner core is the most important thing. And the only one that is dealing with your inner core is you. Okay? So what I usually said to my clients, because I have a security company and I consult people about security, especially physical security and electronic security. What I usually say to people is you need to see your life as circles. And you have a circle here, which is you, right? And that circle has to be protected. And how do you protect it? By creating other circles, right? So you need to have another circle. On the second circle, you need to have your family, right? The circle outside of that is going to be your friends, yeah? And the circle outside of that is going to be your work. And the circle out of that is going to be anything else you like, which is going to be more far distant, okay? Here, it's you. I'm going to put like a Y. It's you, nobody else, okay? And every cycle here, you need to treat it as a defense mechanism. All the external factors, like work, whatever, it should not penetrate and should not come and affect your friends. And your friends should not come and affect your inner circle, right? And your family should not be attacked by the other circles. And obviously, the last and the most crucial circle is yourself. You don't need, you don't have to let all these factors external to come and break you. That is you, right? You have to protect yourself, and you need to put everything around you in layers. Okay, this is your family, but before you're gonna protect your family, you need to protect yourself. You need to be safe, you need to be good, you need to be strong for you to be strong for the others. For you to protect your family, you need to be safe for yourself. You need to be strong. If you're strong, you can help the family. If you have a family strong, right, then it is not going to be in danger from external factors. Is that making sense? I hope it does. Okay, because this is what I usually say to my people. Make sure that yourself here, your number one priority is you. Always you. And this is not by being selfish. You're not going to be selfish if you're going to look after yourself. You need to look after yourself. That's your first priority. Okay? Then your family. Now, if you're not married, that's your family, that's your parents, that's your brothers, sisters, siblings, right? If you are married, that is your own family, your wife, your children, and stuff like that. Okay? So you need to change the thesis around this life. And that cycle, who's inside that cycle, sometimes it changes, sometimes updates, right? That is going to be always you. You go nowhere. Okay? And if there is no you, there's no defense, right? It's gone. The whole cycles are gone if there's no you. So you need to protect yourself. Now, if you're married, then it's going to be your wife, your partner, your spouse, right? If you are having kids, right? I'm sorry to say this, but I put my kids here, and then I put my wife on the other cycle, right? And that is not a downgrade. It is not a disrespect to my wife, but these are my blood. My wife is not my blood. I can't divorce my wife for X, Y, Z reasons in the future, but I cannot divorce my kids. My kids are going to be always my kids, right? And I'm saying that under respect, okay? It's not a downgrade, right? Wife doesn't go away, but I have to be very strong, because if I have a disagreement with my wife, then I need to move her to a different cycle, and then I have to be strong with my kids. No matter what happens between me and my wife, I have to be strong with my kids, right? With my children. So my kids, they are my own blood. So they take, so to say, a higher priority for my wife. And that is not money-wise, and you're not going to change your thesis in your family or your everyday life, but as a priority in yourself, that's the way I see it. Okay, and again, it's nothing to do with disrespect your partner or anything like that. It's because your children are blood related. Okay, you can't ignore the children, and you need to keep everything far away. Anything that is very toxic and everything that is negative, just throw it out in the space, right? Let the first circle to deal with it. Okay, so I just wanted to have nice little positive message that, take care of yourselves, stay strong, because it's very important, right? Stay healthy, because in the mind as well, not only the body, you need to have a strong, healthy mindset, okay, for you to survive whatever life is going to throw you. Now, after that lovely positive message, let's have a look what's going on with the markets, and let's have a look, what investors do and what do they see. They usually use high time frames, and they use something like the 2 month or 1 month time frame for them to see where is the bottom and where is the top. They don't care what is going on in between. Okay, this is what the investors do. The investors, they don't care. They have maybe $1,000 or $10,000 or 1 million. I don't care how much they have. The investors, they invest in the money. They're not good on technical TA. They don't have the time to be on the charts. They don't understand the charts. They don't have the time to be on the screen. They don't understand the TA. They don't understand the FOMO. You know, people say this one day, the next day is something different. They need something more solid. They need to know when to enter to put the money into the market and when to exit. The rest is BS for them. Okay, the rest is too much noise. They don't have the time or the patience to deal with it. Okay, and majority of the wealthy people, they are like that. You know, they don't care. They're nonsense. To them, the nonsense is waste of time. They said, hey, is this the right time for me to put the money? Yes. Where? No. Okay, done. When I'm going to come back? I'm going to back in 2 years, 1 year, 3 years. They don't care what's going to happen in between. So how are you going to do this? With minimum TA. All you have to do is open the stochastic RSI. That's all you have to do. Okay? This is when you can give the best advice to yourself when to invest. When stochastic RSI is at the very bottom, as the lowest possible, and it's giving you a cross-up event, that will be the scenario. Most likely, this is the bottom. This is the time for you to start invest. And when is the time for you to take that money out? When you have the opposite event, all the way up to the top, which is the overbought, and then you have the cross down event. And that's why a couple of days ago, a week or two, I don't remember, last week I think it was, I posted the message that, yeah, it was on the 1st of September. So today is the 10th. So 10 days ago, I said, I'm closing my spot positions. As an investor, the mindset of investor, I'm closing my spot positions because I have a cross down event. Okay. And basically, to be transparent and fair with you guys, what I've done is I've shifted gears. I moved away from spot and I'm moving into the futures. Now, I don't know if the investors will have the time or the ability, the knowledge to do so, but you are here, you're learning, you're learning TA, you are part of the war room, you are part of the crypto school. So what you can do is say, okay, I'm shifting from the investor mindset, and maybe I'll go to the swing trader a bit faster, or maybe a day trader, and make a little bit of money, of the direction of the market. Because in sport, as an investor, you cannot invest on the top and go down to the bottom, right? I don't know how far it's going to go to the bottom. Maybe it's going to turn around. We're going to speak about that in a few minutes. So maybe it's going to come back here and turn around and continue. Why not? That will be a continuation. That was a good, strong signal. Look at that. We had that in the past. It gave you, right, a signal that is the top of the market. Then it retraced and then go for another push. That was the second push that we had here. There was a little bit turnaround, but nothing strong enough to give you another cross up. Okay, now the stochastic RSI is the lagging indicator, we know that, and the 2 month is a very big time frame, so it takes a lot of data, it takes a lot of time for the stochastic RSI to turn and give you cross ups. But when it's going to give you a cross up, it's going to be solid, has no noise. Now, when you get the message, so to say, this is the top, it's about time for you to shift gears. You're moving away from spot and you're going to futures for you to trade the down, something you cannot do in spot. That's why you're going to futures. So you can trade down. If the market's going to turn around and go for another push, then you still trade in futures long. And when you can reach the top, and you can come back again in futures. But how are you going to monitor this? When do you know? How do you know when to go long, short, and long again, and then short for the big time? Okay, how you do that? Do you do that on the 2 month? No, you don't do that on 2 months. Go down to the monthly. Right, here's the monthly. Now you have a faster, twice as fast stochastic RSI, more, let's say, sensitive to data change. So here we are, same thing. Look how long the monthly stochastic RSI is stuck here at the bottom. And then you have the move, right? And then you can have the lines. You can see that you broke the line and treat it as what? Support. And then you have a good understanding. Everyone went bananas on the bull market, that the bull market started around 25, when the bull market started on 15. Okay, so stochastic RSI, you have a cross up here. I'm going to put a vertical line so you can see the price action. Look what it is. The candle is between 15. Let me move that higher. And let me move that vertical line. So what's the maximum? Maximum was the highest 18. So around 15, 18, you have the heads up from stochastic RSI. It's not bad. It's not bad. Now, how are you going to do this now, that swing trade? 2 time frames you can do, after that you moved away from the spot mindset, the investor. After that you moved away from the 2 months, then you can move down to 1 month and the weekly, right? You can move to 1 month or to even 15 days, which is 2 weeks, right? And then have a look what the stochastic RSI is giving you, okay? The stochastic RSI gave us a short, a cross down from the very top around March, right? So March was at the very top, the monthly is crossing down. So you can go short until when? Until you get another cross up. Okay, so I say, okay, that is short. We know that stochastic RSI is a directional indicator. The 2 month, let's put the dates down. The 2 month cross down happened on the 1st of September. So where's the 1st of September? August, September, here we are. So from this point onwards, you need to monitor from this vertical line and to the right, you need to monitor the stochastic RSI, what it's doing, okay? And because this is the time that you flipped from spot to futures, right? Because of the 2 month cross down, this is the time that you need to pay attention, okay? And say, okay, now for me to see what's going to happen, I need 1 extra month. What I'm going to do until then? Then you're going to come down to the weekly. That's why you move down into time frames. The weekly is going to give you a little bit ahead of time in understanding what's going on. And what do we have here? Stochastic RSI is telling me that we're going down, right? We're still heading down. Fast is 6, slow 13, both heading down, and we don't have yet a cross up indication. Okay, what the other indicators telling me? The other indicators telling me that the RSI is dropping. We know this. Okay, and we have a correction. It's heading up, but it hasn't broken any previous highs. So I monitor that, but I'm not yet bullish, so to say. Okay, and ASO is trying to tell me that, it's looking that the negative is losing steam, right? And we have the increase of the positive, right? They haven't crossed yet, but we're not looking for the crosses yet, okay? We're looking for when the ASO, this is for the ASO, we look when you have when you're going to lose the momentum, right? If it's going to be the gray, which is the negative, that means the price is losing steam on its way down. So it's going to go like sideways, right? And then when completely it's going to turn around and we have a cross, and then the yellow is going to come up, that means, the price is going to start shifting and moving to the upside. Okay, so you have these nice little indicators to tell you to give you an idea of what's going on with the price action. Price action is real time, okay? Price action is no comparison the best of all, but even on the weekly, what do we see? Let me make this bigger. What do we see? We see that we have a high, a low high, low high, low high, okay? We have a common ground as a support. That's why I have that key level marked down, the 51, well, this is 52, and that is between, 51 and 53, okay? So it's been marked out for a very, very long time, okay? This is not new. These levels are not new. I'll tell you, I'll show you how I make these lines. It's very, very easy, okay? So we came to this area now. Now the price is approaching again the same support level, and we need to see how it's going to react, because every time that I approach that area, we had a major push. I can see that, but also I see that it did not break the previous highs. It came back, it violated a little bit the area, and then it got a major push, big momentum push. How do you know this? Because of the body close, it's so tiny. You have a huge wick, you know that the up pressure was huge, so it pushed the price up again. We can see the up move, but also we see that we didn't break the previous high. So all your highs are getting lower, right? Once again, we touch the area, we get a push, and this is still under progress. I don't see as yet, right? I getting close or breaking my previous highs. This is still undergoing, so I cannot be 100% absolute about this, what I say here, okay? And this is the 12 hours. And on the 12 hours, we need to a little bit investigate and see what are the key levels. And one way of doing this, the easy way for our brain to see it, use the path tool. That's your highest point. That was the lowest point. I push the correction. That's the highest point. Then it came back to the lowest point. And then it came to the highest point. Come back. Go up. Go down to these levels. And now it's pushing, let's say, the highest here. So I'm going to move this to the right. And I think we both going to agree that all the highs on the 12 hour are getting lower, lower, and lower. And now this is the question. What is the question? When you're going to have the change of character, the shift of the structure, you're going to have it when and only you're going to break the previous highs. Which high? That one there. So I'm gonna put an array, a horizontal array. So we have the price marked on the scale, 58,544. We need to break these. We need to break these to start thinking that maybe we heading for a reversal. Maybe it's not a confirmed reversal. You need other factors before you're gonna call it a reversal. Okay, so Bitcoin has to break that previous high, okay, which is the 58.5. Now, let's zoom out even further. How did I mark these levels? I marked these levels based on the bottom of the bull market and at the very top that we had currently, which is the 73,757. Okay, so I placed my Fibonacci tool to the very bottom to the very top. So I got the impulse. Okay. Now, my levels for the new guys. What are my levels for the Fibonacci? You can go to the Google Sheet. And on the Google Sheet, I have on the second tab, if I recall, second tab here, Gangster Fib. Here are my levels. Okay. And here are my levels, exactly the same. Okay. The green lines, it's the beginning and the end, the 0 and 1. The red line is the half of the line, 0.5, the 50%. It's a very crucial line always. Every time I'm using that tool, I pay attention to the 50, okay? And then I have the individual fractal levels, which is every 2 every 2 lines is the 25%. So that's 0, that's 25%, that is 50, that is 75, this is 100. This is the in-between halves. Okay, that's 12.5%. Okay. You can see that again on the Google Sheet that I have the percentages. So 0, 12.5, 25, 37.5, 50, 62.5, and so on. Okay. The orange are extensions, and you can use these extensions when, let's pretend this is a new token and this is the highest point. I never have any other history of higher prices. And what if that token is going higher and I have no history on the left? Where do I expect the next levels to be? For that example, I'm going to use, let's say, that impulse, or you can use the very top to the very bottom, like exactly with the Fibonacci. Right, so I'm going to use the very top to the very bottom. Then I'm going to enable my extensions. And now that I marked from the top to the bottom as the last impulse, these are going to be the areas that I expect to see some resistance of that token that is going to move to new areas or as a price discovery. It's good for you to know where exactly you are heading. Okay, so that's how you use the extensions. Even with these token, let me switch on the extensions. Let me reverse that. So I use the same tool from very bottom to the very top. What if it's going to turn around and continue where it's going to be most likely to have new resistance points, resistance levels, and I have the prices. All right, and that is my extra 50%. This is 150%. Right, it's 50% above the 100. Again, red. Okay. Right. Okay. Phone calls coming through. I've been already 1 hour and a half. I don't want to keep that live very long because I don't want to be a marathon. For the people that are going to see the recording, I don't want to get them, discouraged. Right, I hope your wife does not watch this, Thales. Yeah, I hope so. I hope so. The link, yeah, I will pass the link. Yeah. Don't give my wife the link. Otherwise, I'm going to see myself tomorrow on the streets. I'll be homeless tomorrow. Somebody take me, save me. Okay, I'm going to put it here on the chat. Here's a link. Right, okay, cool. Right. Okay, okie dokie. Right, so now you know how we do the levels. Now you know which time frames you're going to see as an investor. And you're going to use the indicators to help you. You can do these approaches the same way on the 12-hour and 1 day and 2 days, whatever you like. Weekly, 15 days. I mean, look at the 15 days. What do you have on the 15 days? The 15 days is going to give you a little bit ahead of time, right? A glint, so to say, into the future to tell you maybe we reach the very bottom, maybe we're going to see a turnaround. It's not a bad time frame for you to see, okay? Look at that, 15 days, even as a swing trader, is a good indicator as a time frame, right? Look at how long it's been extended to the overbought area, and then you have a cross down, and then it's coming down, and now we reach the very bottom. That is on the 15, okay? Now, ASO is telling me that it's not yet over, but you never know, because don't expect that always the negative is going to cross and give me a curvature up here. It may give me a curvature down here, right? We care when we're going to see, when you see a negative that's increasing, you need to see when it's going to curve. You see that one? It curved way before it crossed the positive, right? So you need to see when the negative is going to curve for you to say that the down move is over. Now, even on the 15 days, stochastic RSI, we still have a cross down, a new fresh cross down, and heading down. We're still waiting. You want to go down to the 2 days? It's fine. 2 days is giving you a little move to the up, a hopium, okay? But I don't see anything on the delta, but still, we have a cross up. That's why the price action is moving up. Well, let me rephrase that. The price action is going up. That's why we have a cross up on the stochastic RSI. Stochastic RSIs are lagging indicators, okay? But is it going to be, a solid cross up and, break the previous highs and go on the top again? We don't know yet. Still early. Take it, day by day, and take it, level by level. Okay, this is the 12 hours. The 12 hours, this is a time frame that I always use for my day trading. When I'm day trading, I watch always the 12 hours. But that is not an investor mindset. This is not a swing trader. This is like mid-term trading. I'm watching the 12 hours towards swing, right? It's like a towards swing. I'm going to hit the very bottom and go all the way up and trying to catch a leg, like a wave, okay? And you can see, when you have a cross down on the 12 hours, price is already going down, okay? So we spoke about the 2 month, monthly, 15 days, weekly, what the investor is doing. We spoke about how you manage the finances. We spoke about how to deal with the trading journal and the compounding and have your numbers right. This is what the wealthy people do. They know exactly how much to spend, when to spend, and how much to spend. They have the numbers right, okay? So I'm gonna slowly close this stream down. I'm gonna take some questions before I'm gonna go away. This is, we meet here for me to give you my perspectives and stuff like that, but you can always speak. I see a hand up, Harun, if I pronounce that correctly. Please unmute yourself and come up and say hi. What is your question? Take your time. I'll put some background music. Are you coming? You forgot your question? No, right, no worries. You can come at any time. No, Patrick, you're more than welcome. Roy, you're more than welcome. Please, if you have any questions, if you'd like to say something, you're more than welcome anytime. Problem with the mic. Okay, no worries. Would you like to type your message? I'll still answer your question. Share your question. Maybe others have the same question. So I'll do my best to answer. How do I see Bitcoin from now on? Well, I'll still see a short. I'm not trying to be bearish here. I'm not trying to be negative. I'm trying to say what I see on the charts, and it's going down. I see this lovely support, and I hope that it's going to act as a support and give the time for big boys to start building structure here, building money, and then we shift to the up. Is it the beginning of the bear market? I don't think so. Not yet. We need to lose other major levels for us to start thinking bear market. Injective trade is going good, but I got out at 1751 as per your levels. Need some more confidence and experience to get hang with your style, sir. Okay, that's all right. How much do you get? 10%. Good. You're halfway there to your daily target. That's good. 10%. Well done. 22%, 22x. Good. Now, with the levels, please understand this. Okay. You take a trade because you violate one of the trades. You got triggered. It's fine. And it goes all the way up. Now, I've seen that you placed your long tool all the way to the top, right? But you exited, so to say, around these levels. Well, if you target up here, why did you exit here? Is it because you saw that it lost a level? Then you did well, right? Your thesis here, it wasn't wrong. Let me go down to 22 minutes to get more detail, right? So what did you see? You see that you passed one level, two levels, doesn't matter where, and you reached that level, right? Price was going higher, and then all of a sudden, instead of treating this as support, it deviated. So you closed the trade, you took the profit. Fine, not a problem. And then it tried one more time, and it lost it again. Stay under. It's fine if you didn't take the trade. Now it goes above. What you can do, if it happens, timing is always crucial, right? If it happens for you to be around that time when it violates that time, that level, you can still break, not the rules, you're not breaking the rules, you can break through the line and initiate an order and get in, right? And then still have the next level as your TP, but for you to get confirmation, you need to break this high, right? Before, that's supposed to be a line now. Come on. That's supposed to be a line. So you need to make sure, not you, Injector has to make sure that it breaks the 17.61 for you in order to go all the way to TP1, which is up there. Okay. Otherwise, if you see weakness, right, and you're already, in profit, and it goes like this, and then start losing it, and it cannot go higher, then you can close the trade and say, okay, I made X amount of profit, whatever leverage you're going to use. Okay. And then when the price is going to come back in the future and treat this time as a support, then you can start building a new trade and head up again for the same TP. So you can do that over and over all the time. The lines are there for you to make a decision. Do I take it? Do I close it? Do I do TPs and stuff like that? If your final destination is up there and that injector is building momentum and it's going and it's breaking and it's going, there's no need for you to close it. If it holds and acts, let's say it has a huge momentum candle, are you going to close it because it broke the line but it still has momentum? No, you're not going to close it, right? You're going to keep it until you're going to see weakness. Only you're going to close it when you see weakness. You saw weakness here and you close it. Fine, well done, congratulations, you booked your profits. 10% is 10%, is half of your daily target. It's good. It's good. You're doing very well. Well done for that.
Thank you.
And keep on doing the same thing over and over and over, and then your brain will get to a point that in the future you're going to be doing this mechanically. And that's what we want. I want you to spend as less time on TA. We don't want to waste time doing lines and charts and Fibonacci and trend lines and blah 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 and market structure. Or did he have a boss? Did I have a chalk? Did I have the... No, you don't need to spend time. Break the chart into lines and use the lines as a point of interest to make a decision. It's an action line. It's a line of action. Either I'm going to get in, or either I'm going to get out, or it's a stop loss, or it's a validation point. All right? If you're going long, the price is going up, you're going long, and then the price is coming down and violates that line, that's it. Close it. There's no need to go 3%, 5%, 10% down. No. You violate my line, out. Be strict with the market, because the market is not going to be easy on you. So don't be easy on them, right? So be strict. On which time frame is good to put the lines? That is a nice question. That is according to your style. What are you going to do today? Are you going to do day trading? Then maybe the previous day, the previous week is going to be a good time frame for you to use the lines. So let me use that example. I'm going to clear everything here. Injective, I'm going to stay here. Let's say I'm doing day trading. I'm going immediately to the weekly, right? Immediately. And I need a weekly candle that has a lot of information above and below my current price. Right? That's my current price. That's where we are now. Right? I need a candle, any candle, from the past that has enough information above and below. And I see a huge one here, top to the very bottom. Now it's like 3 candles back, 5 candles back, 10 candles back. I don't care. I am in the spectrum. I need some information above my current price and below. Why? Because price can go higher, but price can go lower. I need to know where the next support is going to be and where the next resistance is going to be. So let me bring that back. So I marked that lovely candle here. Double click my tool, go to coordinates, because I use the control key to lock to the very top and to the very bottom, right? So now I need to expand. So I go to coordinates and I'm using the right fields, minimize that, or decrease, not minimize, decrease to the left, that goes to the left, increase the bottom one, that goes to the right. Okay, make sure that I am current. Here we are. Okay, lock it, put the padlock on. Now go back to your time frame that you wish to trade every day, and here you are. So let me remove the cyan color. So here is a weekly range, and you trading from level to level. Okay, and that's what you have. Now, can you break this down even further? Of course you can. Be my guest. Break this down the same way as before. And what do you see? You see that we are struggling with the 50. We cannot go above the 50. Okay, always the 50, it's a magical level. Always has difficulties, right? Look at how many times it tried to penetrate the red line. It didn't, right? Even here was having trouble. And you take it level by level. And obviously, once it reached the same area, a sell-off. A lot of people are selling here. Why? Because they had exactly the same. Oh, let me put that back. They have exactly the same understanding that everybody's sold here. So for the people that went for the second try, they know that people selling here, so they sold it. That's why you have a wick for the time being. Now, the second retracement, that retrace, is not going to be as large as this one. It usually doesn't. That's the primary, that's the secondary. The secondary has less strength, okay? But that level now, I hope it's going to be cleared. It got touched, activate the selling orders, they're going down, it's going to come back maybe to this level and treat it as a support and not to go as deep as a deviation. So let's hope that retracement will not go any lower than 17.18. If you find a support here, then you may, as a day trader on a 22-minute time frame, you may continue to think long. Why? Because if you look to the left, this is what you have. Excuse me, I sneezed. I hope I didn't blow your ears off. So for the smaller time frame, you see that injective, it moved from consolidation, right, from sideways to up. So if you want to take this as an advantage, the small leg, the correction, because on the higher time frame, we're going down, right? Look at the higher time frame. We're still going down, right? Look at that. Highs, lows, high, and that happens to consolidate here. So currently, on the smaller time frame, you may take advantage of the correction, but be aware that later the big leg of the short is going to come. So be ready to shift quickly, right? Now you're going long, but later maybe it's the time for you to go short. So be aware of that. Now, for you, you don't need to stay like, cross-handed and, wait until the short is going to come. No, take the advantage of what the market is giving you for the time being. If you want to do day trading, right? We need any token. I don't care what token it is. Is it Bitcoin? Is it Ethereum? Is it Solana? Is it Injective? Is it meme coin? I don't care. I've got meme coins here. Here's Popcar. Here's Mog. Here's Pepe. I don't care what the meme is. Here's Zero, right? Zero, I was watching this area. And I said, okay, I'm going to go long from these areas. And since then, it went up. How much? I have an alert there. It went all the way up to 8%, 8.8. Do an easy 10x on that one. That's 88%, right? And you go level by level and see, again, once again, you see the red line that is giving you an understanding that, this is a trouble area. Since you broke it, it acted as a support. I said, okay, here we go. Right, now it's coming down. Okay, let it come down. It's fine. I don't care what the token is. That was a range. Right, that was a range. I marked the range. That's why I had that blue line. That was my range. Let me zoom out a little bit. Here's a range. Right, that was a range. And I said, I need to know when it's going to break out the range. I had a few fake outs. I said, okay, it's trying to get out. Once, twice, 3 times. If it's insisting, it's going to get out. It's respecting the bottom of the range, but it's not respecting the top of the range. It's violating the top of the range. Fake outs. I said, okay, it's cooking. It's going to get ready. And then I put an alert. You see the little alarm clock there. An alert on the blue line. Since I got broke, that was it. I got in, came back, retested, violated a little bit the range. It's fine. And then it pushed up. It's fine. That is on the 11 minutes. Go to 45 minutes, a different story. Different candle or something. Right, here it is. Broke. Come down, retest, off it goes. Okay? And how do you see these? Push up, retest, and maybe continuation. If it fails to break above 3.5 and start moving down, then maybe we're talking about reversal, that uptrend is finished. Okay? But here's the levels. Go level by level. What do you see here? Weakness. Nobody's above 3.6. Nobody's above 3.6. What does it mean? Weakness. Look at the big wicks. Sell off. Massive sell off. It went very fast up and then on 3.64. Look to the left. Ah. Now you understand why. That was the area when the major sell-off happened. So what do you expect when you get there? You expect that it's going to get wrecked. And that's it. But look, my line. Here's my line anyway. You see? This is how you're going to do it. Step by step. You don't care what the token is. You care that you have a movement. In futures, we don't own any tokens anyway. In futures, we just, let's say, which is the wrong word, but it is what it is. You are betting on the performance of that token. If it's going up by 50%, I'll make money. If it goes up by 5%, I'll make peanuts. I'll make nothing. So I'm looking for a performer. Who's performing? A token that moves. Now, if the majority of the people, the masses, they're going crazy with meme coins and they don't give attention to Bitcoin and Ethereum, I can't change these people's minds. They want to play with meme coins, I play with them. I let them, do whatever they want. All I want is, I want a chart that moves. I don't care what it is. This is not spot. I'm not investing into that token. I'm trading due to the performance of it. Okay, so almost 2 hours. I'm going to close that here. Is there any rule of type of trading to choose the time frame? Not really. It's not a rule, but you need to. It will not make any sense. Let me put it that way. Let me try to answer this. It will not make any sense if you want to be day trading, right? You want to do or intraday. You know what's intraday? Intra means a couple trades per day, right? It's a bit faster than day trading. It's called intra. And more faster than intra is the scalping. Okay, scalping is like they're looking on the 1 minute. Okay, intra you may look on the 5 minutes. Day trading you may look the 45 minutes, 11 minutes, 15 minutes. Let's say the generic 15 minutes. Okay. So if you're trading on the 15 minutes because you are a day trader, there is no point for me to go all the way up to the 6 months and mark the lines. Let me go to interactive, clear everything, and go to 6 months, right? And where is my current price? Here's my current price. That week, that candle is no good for me So the one before. So I'm going to mark the one before. Here it is. Right. Go back. Expand. Go to the left. Go to the right. Yep, I covered my area. I'm going to lock it. And then I'm going down to 15 minutes. Right. Now, here's my price action. And I cannot see the lines. Where are the lines? Oh shit, it's down here. Right. Let me make it a bit thicker so you can see. So I have one line down here, and I have one line all the way up there, right? So let me zoom out. So that, how can it be any good for a day trader? It can't. It's too wide, right? So it doesn't make sense to day trade with a 6-month range. Is it valid? It is valid. Can you manipulate that a little bit? We can. Let's break that level with a new level, right? And now you break down this level. Now that is a bit better, but not as an intraday. A day trader, yeah. Look at that. We are in a range. And you wait for the breakout. And then you go level by level. And it's kind of okay for day trading. Kind of, okay? Solid lines. Correct lines, but too wide. What if you go to weekly, even go monthly? All right, go monthly. That candle has enough information above and below. And even that candle is good, that candle is good. Choose whatever you like. Would you like to have more closer lines? Go for the smaller candle. Here it is. Right, here it is. Go to the right. Make sure you're covered. Yes, we are covered. Here we are. Go to the left if you want to play around with it. Fine. Lock it. Make sure it doesn't move. And then go back to your 15 minutes, whatever time frame you're using. Now the line's a bit closer and not too wide, right? So, okay, I see the lines. Same principle, same conditions, right? This is my line. You stay above this, I treat you as support. I buy, right? Where's my next resistance? All the way up here. All right. Now, do you want to break that down? Be my guest. Here we are. Break this down. And then you have it. And then you have more lines for you to monitor for invalidation. And you can say, I mean, these lines, right, they're going to help for the intraday. You can go even down to 5 minutes. You can go down to 1 minute and look how the 1 minute is looking. It's looking pretty, right? These lines are looking pretty with my price action. My brain understands these lines. What do I see? Weakness. It cannot go any higher. You violate my line. Out. Out. I'm out. That long is finished. And then you are on the red line. How are you going to treat that red line? You're too far away from that line and you are too far away from that line. You are in the middle. What are you going to do? You're going to wait. What are you going to wait? What's the condition? I need to treat this as a support. If not, and it's going to lose it, then I'm going to go short to this level. And if it continues, I'll continue. Right? If it continues, I continue. If it finds resistance, out. End of trade. You're looking for the next trade. You're looking for the next setup. So these lines are not magical. These lines are going to help you to validate and invalidate as soon as possible for you to take action. And this is how you're going to do day trading. It's the easiest way I found. I tried the sniper school method. I tried the crown. I tried the well. I did not ICT completely, but let's talk about smart money concept, which I had to tweak to be correct with crypto, because smart money and ICT is being designed on Forex, and crypto has no similarities with Forex. It's too volatile. So I had to trigger a little bit, tweak the conditions. But even though it took me a lot of time for me to do a TA every morning per chart, it's going to take you 15-20 minutes to do a TA on smart money concept, and then you have to wait for the conditions to be triggered for you to get an entry. And I said, no, I'm wasting so much time. I need to find something very quick. If I wake up in the morning and open my computer, what do? I need to scan who is performing, who is moving. And then I need to break things down as soon as possible for me to take action. There's no need, there's no sense for you to wait hours and hours until you get the conditions right. No, you need to trade it immediately. Immediately, you have 3 hours on the screen. You need to trade 3 hours. Now, how much money you're going to make, that's a different story. You may make 5%, 10%, 20%. It doesn't matter. Make money. And for you to make money is by having the checklist here. And the checklist is like, okay, if we drop that, okay, check, we're holding this. Oh, all right, trouble ahead for the shorts. Okay, so to say. You have levels for you to invalidate or validate. The problem with the traders, especially the new traders, the problem for them is they need to remove the fear how to enter a trade, how to enter into the market, right? That's the first thing they need to deal with. Secondly, once they entered, they need to deal with emotions watching that trade. And when they see a red one and it goes to their negative, they panic. They don't know what to do. So you need to deal with that as well. Third, once you're in and once you're panicking, you don't know when to exit. In a bad trade, where is my invalidation points? When do I need to take action? They don't know. They don't see it. Or in a good trade, where is my TP? Where do I pay attention? Where do I move my stop loss? When? And where to? These lines, they're going to give you that. And you can design these lines within 1 minute. And I said, okay, I found my recipe. I find a strategy, a method, a tactic that is very quick, very efficient, and I know where my next target is and where my next invalidation point is. End of story. No BS. Straight to the facts. And for you to be successful with that kind of tactic is to make sure on the time frame that you are using, like if you are day trading, watch the direction. Make sure you going on the same direction. If it's going up and you have all these lows getting higher, now you have equal highs, that's a different story. Right? You cannot go forever up. It's going to come down and then continue to go up if it wants to go up. But make sure you follow the direction. Let's say if it's uptrend, understand that the up legs are going to be bigger than the corrections. Don't try to trade the corrections. Try to find a good, nice trade for long. Okay? Now, if you say to me, I just woke up, I saw these big moves, right now it's retracing. Do I wait for another hour or can I trade the short, the correction? You can, but be aware, be strict with yourself that the corrections are small legs. It can finish at any time. How big that is and how small that is. You never know when it's going to end, but you know that the downtrend, okay, or let me say the correction, the pullback is going to be always shorter than the up leg, the uptrend. So be aware that, that short that you're trying to take is going to be for a limited time. Until you get ready for the next leg up, why not? Use that time to your advantage. If you're not comfortable shorting on an uptrend, look for another token that is moving to the upside. And come back to injective when it's finished with that correction. Don't wait, cross-handed until injective is going to come back. You see, it violates the red line. It violates the red line. What are you going to do? You say, I see equal highs, triple top, I see weakness, that is not acting as support anymore. It tried once, it tried twice, third time it got validated. It's going down, baby. You don't need to overthink. Tommy the pilot. Tommy is driving, he's wearing a seatbelt, but on the background he has a bridge, so he looks like a pilot. Where are you flying, Tommy? Right, okay, cool. Right. I hope that was nice and easy for you to understand. I hope you had a good time. We're past the 2 hours. I'm gonna close these. Can you please show how to mark the key points levels with the Fibonacci retracement on the different time frames? You mean the Fibonacci with a Fibonacci sequence? Okay, I'll do another day. I'll do another session talking about the Fibonacci. Because Fibonacci again is a very powerful tool, but it's a psychological tool. Okay, the golden zone, the 618, it's a tool that all majority of the traders are using, no matter what market you are, crypto, forex, stocks, whatever it is. Everybody is talking about the golden zone, so everybody is waiting for the 618. So majority of the people, you expect that they're going to take action on the 618. And that's why you see price action is moving. Okay, so I'm going to do a video about this, but not now, not today. I'm already 2 hours here. Are you buying, selling with the current market? I'm buying and selling all the time. I'm going with a direction. I don't care what it is, but in general, my thesis is still short. Like my big time frame is telling me short now. If he's giving me a short opportunity to go long a little bit and get some, some percentage, I'll do it. I have these lines to keep me in track when when things are turning around for me to close a trade. These lines to keep me in track. This is what I'm trying to teach you here. Right. If there are no other questions, I'm gonna close this trade.
There's a
What's up?
real quick question,
Yeah, go for it.
if it's okay. When you take a trade, it's like you take it on full 100% of your portfolio, or like it's like you break down.
That's a nice question. Usually my approach, that's a very nice question. My approach, personally, this is me, Thales, and I don't expect everybody to do that. I go full wallet, okay? Now, a lot of people will panic. Hold, don't panic, wait. Now, if you go to my DCA calculator, sorry, my risk calculator, I have that little calculator here to tell me what is my maximum leverage with my full wallet, okay? So let's go back to trading view very quickly and let's pretend that I want to go short. Let's say that I want to go short from here, okay? No, that's the wrong tool. Short tool here we are, short tool. So I want to go short and I'm looking to the left and I say, where is my range? My range was here on the green line. So I want to target that green line above the range. I have high expectations, so to say, okay? So here's my entry. My entry is going to be under the red line because I'm going to enter after the break of the red line. Where is going to be my invalidation point above that red line? Give or take, right? What's the percentage? 0.7. Give it a bit more. You want to give it more? Give it more. Follow these bodies. 0.13 is my stop loss percentage. I pay attention to that number, 0.13. So I go back to my Google Sheets and I say, hey, my TA, it says 0.13 is my stop loss, okay? How much money do I have in my capital? Let's say my wallet has only 500, for example. What is my maximum risk? I don't want to risk more than 3%, right? This is my general rule. I don't want to risk more than 3%, okay? My invalidation point, still the same. If it goes above the red line, if the price goes under and then it goes above, then it's invalid. There's no need for me to target my stop loss there or all the way to the wicks. No. As long as you break above my line, I'd rather be safe than sorry. I want to minimize my risk as less as possible. There's no need for me to go all the way up to 0.5, or there's no need for me to go to the top wick, to the 32, right? Above the previous body is fine for me. Here it is. It's coming to my stop loss. If it wants to come to my stop loss, it's fine. Okay? 0.12, whatever that is, 0.12. Okay? Go to 0.12 or 13 is fine. 0.12 is giving you a leverage of 25 with full wallet. But the stop loss has to be there. 0.12. Why? Because that calculator is going to calculate and trying to translate that 0.12 to be equal to 3, which is your maximum capital risk. It means you're only allowed to lose $15 out of 500.
Okay. Cool.
And this is the way I'm using my calculator. So my calculator says I can use my full wallet with 25x, but my stop loss has to be 0.12. Now, if that goes all the way down, either I'm going to lose 15 for this instance, let's say, for this example, either I'm going to lose $15 with 25x, or what's my target here? 2, I'm going to win 50%, which is half of my wallet. My wallet was 500, so either I'm going to win $250 with this trade, or any amount, because the market may turn around from here. Maybe it's going to turn around from here. It doesn't matter. It doesn't always go to my target, right? Then either I'm going to lose 15 or I'm going to win 250 or any amount per line. And this is how you're going to take the trade.
Cool. Got it. Thank you.
You're welcome. All right. So here we are. That trade, if you did the scalping from this level to this level, and then it turned around and it came back to the same entry. Okay? See that? One line with one line. If you did a day trading or scalping from here to there, you see that the price action, the bodies did not pass that line. So it's telling you it's no continuation as yet. Now it wants to push up. Fine, no problem. Markets go up and down. I mean, this is the 1 minute now. Don't go crazy. This is 1 minute. I'm not telling you to trade the 1 minute. We're using the candles as examples and the levels, right? It just happens the candles will be fast on the 1 minute. Don't be scared, okay? So I hope that it was a good session. I hope you learned a lot about how to manage your finances, how to do your targets, how to have your numbers right. And, if you go small time frame, the time frame for you to target, to draw the lines, don't go crazy about it. I mean, if you want a day trade, mark the weekly. If you want to scalp, mark the daily, mark the previous day. Have a look what the previous day did, right? Remember that, that's another little trick for people to know. When you mark the daily, okay, majority of the time, the next day, the candle is going to be within the previous candle, right? So the previous candle, let me rephrase that. The previous candle will help you, will give you the range for the next day. So look at that. That was one day. Look at the next day. The next day, it traveled within that range and then it get out. Okay. Next candle within the previous day. Right. The next candle within the previous day. Look at that. Right. The next candle within the previous day. It progresses. It will go further out either way. That's okay. But you have a range. That's why we call it a daily range. You have an area to work with. So if you wish, you can do the previous day. Break it down, come down to 15 minutes, and then here you have it. Smaller trades, smaller levels, smaller trades, smaller ranges, like a daily. That's a daily. And here is the price action according to your daily, the previous day. Is this price action listening and obeying, so to say, or respecting, to be polite, these lines. They do. I can't find the gangster fib. Where? On the tools? There's none. You need to pull the Fibonacci tool, right? Use the Fibonacci tool and then double click, go to style, and use the numbers that I have on the Excel sheet, which is on the second tab. Second tab, gangster fib, here it is. Okay, here are the levels, here are the percentages and the colors. Here it is. The gangster fib. Why you call the name gangster? Because of the GAN box. I used to do that with the GAN box, but the GAN box only had 5 fields. No, 5 or 7. It were fewer. I needed more lines. So here's the GAN box, and I already have the settings in there. It has 4 here and 3 here, 7 fields, and I needed more lines, and I couldn't use the GAN box. So it's the up version. So I need to find a name that is familiar with the GAN box. So I said gangster fib. GAN fib, mafia fib, gangster fib, you name it. It's up to you. But anyway, yeah, so gangster fib, here it is. And, you know, this is the previous day, and here is injective price action is respecting the lines. What better than this for you to have lines drawn on your screen that the price action, it becomes almost predictable, and then you know that you need to travel from here to there and then from there to there, and then you follow, you just go. Now any time frame you want, 5 minutes, here's the 5 minutes. The line, the origin of the lines will not change because they are static on a specific price. No matter what time frame you're going to switch to, the lines are going to be there. Okay, I hope that is nice and simple, practical. We're going to keep on doing these from next week. I hope next week I'm going to start because the day job project is going to finish now. So from next week I'm going to do live trading. So I'm going to be not on TradingView. I'm going to be on the exchange, and I'm going to break a token into levels, and then I'm going to take the opportunities live. Okay, and we're going to do the same thing. These trading methods are great. Yeah, I hope so. It's my baby. It's a combination of many things. Right? Okay, if you stick around to the war room, you're going to learn from other traders that are more experienced with multiple levels, like the daily, the weekly, the open, the close, the highs, the lows, the mid. They break down the lines on the different areas, but the concept is exactly the same, right? You mark the lines and you see the price action, how it's treating these lines. If we keep on breaking and going above the lines, you go long, right? Where can you find this spreadsheet? I will share the link again. Let's say that if you came to the live now, you probably didn't get the link that I posted above. Oh, that's it. Well done. Here it is, the link. You're more than welcome. And you can see all of it. The only thing that I'm still working on it is the trading journal. I'm trying to make it nice and pretty. Go back to the recording later today. I'm going to post the recording later. So go back to the recording and you can see what I spoke about the journal, right? And all the good stuff that we spoke about, what the investors do, what do they see, and how they manage their finances. So, ladies and gentlemen, I'm going to close this trade. I hope you had a great time. We're going to do this next week, and from next week onwards, it's going to be more frequent. We're going to do live trading. Derek, you have your hand up. Would you like to say something? You're more than welcome before I close. Last question. No question? Would you like to unmute yourself? No. All right. Okay. No worries. Okay, ladies and gentlemen, have a good day. Have a good week. Kalimera for me, which means good day, good morning. And I'll speak to you soon. Take care. And if you've got any questions, if you need any help, just tag me in the school or in the war room. You're more than welcome. Come and find us in the war room. We have a good fun. We've got lots of trades going on there every day, multiple trades. I'm telling you, it's worth it, more than worth it for you to come to the war room. That's a small glimpse here. Let me give you. We have Carl that he's posting all day charts, giving you advices, giving you directions. You have the daily candle, which is going for the subscribers. We have the institutional charts. You have Chris that he's doing the trading, posting the trades, 204%, 29%. It's giving you the directions, the plans, how to do these, right? We do live psychology. We got Farouk. Here's Farouk. He's giving you charts every day, all day long. Here we are. He posted today, 10:34, a couple hours ago, stacks along, right? So we do these. We got Josh doing the same thing, right? And you have me that I'm not active lately a lot because I have a lot of complications with my day job. I have commitments there. I need to finish a project. But if you go further down, you're going to see me here. Here I am. I'm doing my coaching. I give out some nice tips, right? And then I have the charting. I do the charts. I give out my own trades as well. Okay, so if you wish, you're more than welcome to join us on the war room. It is, it's gonna be worth it. You're gonna learn a lot. And as an objective, remember what I said earlier. The correction legs are gonna be smaller than the big legs to the upside. So if you have the correction correctly on the day, for the day, the big up legs that have momentum, right? The down legs that don't have momentum. So that's it for me today, guys. Take care. Have a good day. I'll speak to you next week. Take care.